just wanted to give everybody a big hug, say thank you for being here. I know that it's a bit crazy out there. My thread yesterday, with that video that wouldn't upload, it was so weird with Peter Schiff. It wouldn't upload to Instagram or Facebook, talking about the dollar dying. It's like, really try to hide this? I mean, this is a really important topic. And as I said in my thread, it's not for a doom and gloom prospect. I have never talked about this in any way to make anyone feel like that's it, it's over, we lose, accept it. I, have come from this from day one, that we have to embrace this change because we've all realized how broken the system is. And even now with the crypto market, I mean, we got to open with that because, like I said, Vicky, there were some people in our digital asset group that were getting, all kerfuddled about what's happening with Luna and where the markets are going. Do you want to just say a few words on, to some of that stuff with Luna and Tether, and what your thoughts are after watching, the blockchain backer, et cetera?
Yeah, so some of the big kind of players in the trading market, especially in crypto, blockchain backer being one of them, has come out and apologized for his trade analysis, feeling like he's led people down the wrong path when it comes to certain coins and things like that, which he hasn't. I've watched him for ages. He's great. He's very concise. He works in a mathematical way. Pardon?
We love you.
Yeah, we do. Oh my gosh, we've learned so much. But he's also very level-headed when it comes to controlling your emotions in markets, which is something we've always touched on, and gone from drunk trading, Jen, to actually stopping for a second, reviewing what's going on, looking at the impacts externally that is potentially influencing certain coins into those kind of dump runs, as we've seen with Luna. One of my kind of theories, I don't know, Christian, if you've got any kind of theories, but there is a battle for the leader of the stable coin, and it seems quite good timing that, Terra, UST, isn't it, is battling against USDT being, I've lost the blooming word. Tether. Oh, because they're so similar, it's driving me mad. Terra and Tether. And Bitcoin obviously being intrinsically tied with Tether, and every time they print, it helps bump up the market a bit more and gives it a bit more stability. And Terra was, doing the same with Luna. So there is this big background battle. And it was interesting that a whistleblower, so to speak, came out with the old BlackRock Citadel involvement in it. And you're looking at big investors who have a lot invested into Bitcoin, whether or not those big players have some say in coordinated dumping certain markets in order to help their coin become a leader or to destabilize. The other thing as well is it generates mass panic and fear. So as it starts dumping, and as we were talking about, all the longs are jumping out and it's compounding the dip, then new retail owners go, sugar, I'm 50% down, I can't afford to lose it. So they start selling, which then compounds it even more. And then we just end up in a bloodbath, which is what we've seen over the last couple of days.
Vicky, you and I are going to talk crypto, okay? I tell people are very concerned about Luna. What are we telling people to buy?
Oh God, I don't like telling people to buy anything. It's always a do your own research on it and find the coin that you're comfortable with. There's a lot of noise around Luna at the moment. It's very volatile with the news that's coming out on both sides of it. I'll be honest, I've set up a position at the bottom end because, it's got to go back up somewhere. It may go lower, but for me, I've cut out the emotion on it. Similarly to Chris, I don't trade or buy with emotion and stuff like that. I know Terra. I've read Terra obviously is working really hard and looking at what they're doing with regard to the link between UST and Luna at the moment. And there's a lot of conflict with regard to overprinting, which is again then putting the market cap or the amount of Luna coins that are available up in order to help support UST. So they're kind of like trying to, at the moment, it feels like they're in the hull of a boat, putting their hands over holes, and which has just been hit by shrapnel to try and stem the flow. I do believe some of the exchanges are looking at halting some of the trading pairs. I think Bitrue was going to be halting some of the trading pairs with Luna. Again, this is to try, I think, to stem the bleed, because there's been a lot of money lost.
Well,
UST
a lot of people are very concerned about what's happening in the market overall is with crypto. And when you have someone like Janet Yellen coming out that a central bank digital currency is going to diminish the stablecoin proliferation, I mean, it makes people go insane, because now they're thinking, oh gosh, now all cryptos are going to be, you know, outlawed, et cetera. When really what I'm trying to get the point out that this is exactly what we have expected. I mean, there's going to be volatility crossing over from one system to the next, new stable coins to the new, to whatever the new regulations will be. And as we see increased volatility, you know, it's almost like it's setting a stage to ask for further regulation. I mean, and then you have these people coming in and talking about central bank currencies. I mean, this is where we know they want to go. And so I mean, when they want you out, they want you out. So is Luna a play to get everybody out? Or is it a play to control so that that as it replaces the stable coin, you know, you have massive manipulation from the big guys. We're going to dump that price down, make it seem like it's completely dead. I mean, they've done this with XRP. I mean, do you guys remember when that lawsuit was announced? So, you know, I was listening to BC Backer before this, and he was all upset because, you know, the reasons you just mentioned. And he had said, you know, I've been through a lot of capitulations. And I thought, well, this is kind of no different, especially when we are expecting a complete economic collapse. And there's no coincidences with this introducing of regulation or the SEC lawsuit, as we know. So there's you know, expected volatility. Of course, these big whales are going to control where the prices go. And if there is going to be a new stable coin or a replacement, then yeah, drown the market down, get the best buy-in. Retail investors aren't the priority, so no one cares about the little guy. I mean, it's just, and so this is what I want to stress to everybody at home, that it's really, you know, what we have talked about, the ISO accredited coins. That's the main focus of this channel's discussion. You know, where I've entered and been educating, and you know, Vicki and I have been talking about crypto for the last year from the place of, you know, currency dying, the Ponzi scheme within the central banks being replaced with these new ISO coins. But how would you completely move the market into a very few ISO specific coins when you've got thousands of coins out there? So of course you're going to play the volatility, mess with the retail investors. Their emotions are going to go while you ultimately are paving the way for whatever the whales want to do. So I wanted to make this point with Luna, because, you know, a cheeky punt into Luna, I mean, is it dead? We'll see. Or is it being manipulated so much with the fear, uncertainty, and doubt, just as we've seen with XRP? You know, when the lawsuit came out, we were on a high, what was it, like 50, 60 cents? And then it just tumbled back down to where it was at 20 cents. And then it came back up. So, I mean, XRP has been on the firing line before. So we've seen these kind of, you know, crash and burn style type events. Do you think we're going to still see the XRP bounce back to 20 cents, or did you cancel all your buy-ins?
No, so looking at the patterns, similarly to what, you know, Christian works with, looking at previous cycles, lengths of cycles, and how the pattern formation, I've always said, I've said it for months, haven't I, that I feel, looking at the way it's moved previously over the last, you know, 4 or 5 cycles, there is this massive crash at this point before it does it takes off and heads off to its, you know, kind of all-time high. The length of time between it forming that pattern extends. So it may be, you know, back then it was like a 2-hour candle where it came all the way back and it tested its start of that cycle at the, you know, it was 0.02 cents, and then it went on to make its all-time high at $4 over 28 days. You know, I've still got a theory, if we're following those patterns, we're actually within range
Okay, perfect.
Which is why I'm not kind of concerned. I know it seems like a bloodbath, but it's following what I've seen and how I've read the charts, and everybody reads them differently. So, and I've not been concerned, because I said I've got an 18-cent buy and I've got a 22-cent buy and I've got a 25. If it hits, great. If it doesn't, it obviously I didn't predict it correctly, but I predicted every Luna's ones on the way down. So that was quite good.
And I guess it's not necessarily like, no one really knows. So, I mean, no one should be upset if we, like BC Backer, I mean, you see, like, I made a wrong call. Well, no, you didn't. It's just, you're not the one controlling the market. You're doing the best you can. Obviously, that's the expositional point, but everybody can only work with what we have. I mean, no one's actually in that seat of any of these institutional buying, being the one behind the, the Wizard of Oz type of figure. It definitely goes on. But, when we're looking at charts in historical context, I needed to make this point, because a lot of people that are new to the crypto markets have never been through a bear crash like this. I mean, this is a devastation. Get out now. We're going to make you all full of fear. I mean, what was that article with Coinbase coming out? Like, oh, if we happen to go bankrupt, we keep your assets. What? I mean, Coinbase is one of the most like early entry, anybody can come in and buy crypto. And now you're saying that those people are most at risk because they're the ones who bought in, paid the highest fees with the easiest exchange, who's now just happens to conveniently excuse themselves if they go bankrupt.
Very, very bank in regulation there, isn't it? Oh, maybe they're tied in to have to follow it in the same way.
We see massive market manipulation where guys decide, okay, this is going to be a new stable coin, or this is what we want to do with this coin, so let's destroy it. And then we see, exchanges come out saying, well, look, if we go bankrupt, too bad. And then you've got fraudsters out there shilling all kinds of garbage crap coins. I mean, let's count the ways of how many, things that we need to that say, ultimately, there needs to be some kind of regulatory clarity on all of this, because you can't have this. I mean, that's not capitalism. That's not free markets. Free markets aren't those that, you pay the most to control. And that's not how this happens. And then we can't sit here and play favorites either. Again, so for example, like Shiba Inu, it started as a meme coin. It was one of these crazy wild ones that people either made a lot of money the first time it pumped, and then they bought in and they're holding. We'll talk about a story of a development team that just refuses to give up. I mean, they don't want to be a meme coin. They want to be a utility coin. And they're going to try to do everything they can to match the demand of their community and serve the needs of those that are, that love this kind of cult following behind these dog coins, and then look at what's building out on top of the Shiba community. I mean, they're building the Shibaarium, the Shibaverse, these virtual plots, NFTs. They're being used for Wallies, for food, a food chain. They're being used for travel sites. They're being used for fashion, retail, so, I mean, all of a sudden, what, a dog coin, really? And so I think it's really interesting how when you see the development of this space kind of take off, and in certain communities really push forward. Shiba is a great example of the community that's really willing it into being a proper coin. And then on top of that, you see, really awesome projects like the Shiba NFT come out, and they're selling NFTs with Shiba. I mean, there's so much that's happening in this space. So I don't want to deter anyone, because you see this massive, decline, and to just reiterate the fact that, you guys, this is the world of crypto. You don't lose because you have this massive fall. You don't sell at that point. Look away if you have to. We don't necessarily tell everyone which coins to buy. We've been very focused on the ISO coins, XLM, XRP, those that like Algo, XDC. So everyone's got their favorites. I just mentioned a few of them because I wanted to kind of give some clarity, for those that are freaking out about how low these can go. as low as they go, trust me, some of these wild meme coins can turn around and pump back up. And then that's more profit to take to end up putting into either, more stable like coins and ISO coins. Yeah. So crypto is one part of investing. And that was what I wanted to make sure is that we could discuss this, because I know this is on everybody's mind. It is concerning. Whenever I see, used car salesmen trying to still shill garbage on top of the noise and the FUD. And when you see exchanges coming out and, other, BitTrue again was halting trade, leverage trading pairs, and they're trading, halting. I mean, this is just showing a dramatic screaming, please, we need some kind of regulation in here to obviously, I mean, what the SEC should be doing, really protecting the investors, not going after the coin, like they have with XRP. So now I want to transition into Christian, who comes from this from a different perspective. So as Christian said at the top of the call, crypto isn't what he's into trading, right? You day trade. Where'd you go, Christian? He's still there.
There we go.
Okay, so Christian, tell us a little bit about what you're doing. Are you working on the Dow, S&P? Where's your focus?
My background, is, my background is psychology, and I teach meditation, and I am not financial in any way, but I got very sick of working for other people, very sick of requesting annual leave, doing the 9-to-5 thing, working like 6 days a week. So I spent all of my spare time finding out, well, what do other people do? There must be something else. Not everyone works a regular job. So just over a year ago, I completely managed to get myself out of working for somebody else. I was in property management, believe it or not, at the time. And I did that through this. This has been the vehicle for me. And I did it just by self-education. So learning is earning with this stuff. You do have to, in my opinion, be quite careful with where you learn from and who you learn from. I wasted a lot of time on indicators, on charts. I wasted a lot of time worrying about the Fibonacci's, the RSIs, the this thing, the divergence. Realistically, what I've noticed is over this short period of time is that these things follow patterns. And I don't want you to believe me, I want to show you. So without further ado, if you guys don't mind, can I share my screen? And if I do that, sorry, I've got a unique setup in here, so I need to just see where my screen share. Here we go. I want to make this, and first of all, before I continue, I just want to say something. This is not financial advice. I am not a qualified financial advisor. This is stuff that I've learned myself. Look, so I came to this not that long ago, and I hadn't got a clue. And I looked at, this is tradingview.com. Anyone can go to tradingview.com. You can start looking at charts for absolutely free. It won't cost you a penny. And you can learn this stuff yourself. And it's quite remarkable. So I used to look at these charts and be like, what does that even mean? What are the red and green things with the little wicks sticking off? And I'm just, I've not really got a charting background or financial background. So I'm going to give a whistle stop tour. I'm aware we're 8:35, so I'm not going to harp on and on and on. First thing I want to just explain to anyone who doesn't know, these candles are called Heikin-Ashi candles. There's lots of different types of candles, bars, regular candles, hollow candles. These just smooth out a lot of the noise for me when I'm looking at big picture stuff. And you can, just looking at this, you can see green ones go up and red ones go down. So we have what's called the strike price. We have what the stock is trading at right now, or the coin, or whatever it is. You can see Bitcoin's taking an absolute beating. And I'm not going to go into the bid and the ask, because it can be quite confusing, because there might be people who are very, very new, and that's not important for the purposes of today. So when we want to know about the price and what's going on, we have this thing called a candlestick. And really all it means is I'm currently on a weekly chart. You can change the chart to weekly, daily, and then intraday, 4 hour, 5 minute, 1 minute, if you're crazy. And so this candle, because I'm on weekly, this represents what the price did in Bitcoin, because we're in Bitcoin US dollar, so Bitcoin relative to the dollar. And it tells me over the period of a week, what did the price do? Well, it started down here, 395.10, and it came all the way up. And the reason it came that far is because the wick comes all the way up to this level here. My little dotted line in the black bit on the side tells me what price that is. And then it pulled back down, and the price at the end of the week, there's a countdown timer for the week, and the price closed here, 52,777 or thereabouts. That is literally all the candles telling you. Green ones, it opened here, closed here. During the week, the price explored its way up here with this little wick. And then conversely, the red ones are the same thing. And sorry if I'm teaching some people how to suck eggs, I know, but this stuff I hadn't a clue about. I was hopeless and I didn't know what it meant. So of course, this one, it's a big juicy red one. It opened up here and it closed down here, just the opposite, open, close. If you can see the little hand, open, close. And during that week, the price came all the way down to the end of the wick, and then the buyers pushed it back up, and it kind of pulled its candle body back up to here. That is, hopefully I've done that enough justice so we can see. So it gives us a pattern of what the actual price is doing. So it's coming down over a period of weeks here, going up over a nice period of weeks here. Everyone was really loving Bitcoin then. And so when I look at that, I'm like, what? It just goes, burp, 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 burp. It just looks like nothing until we start to do some drawings on it. So like I said to you guys, I got out of crypto. I had a position and I got out around January and just took profits. And why did I do that? The major reason is this, and the main thing I want to hammer home to you guys is that these things, whether you're trading, you know, the S&P 500 or Home Depot or Coinbase or any coin, this is computer algorithms from what I can see. And when they get to a certain point in their cycle, they do something relatively predictable. And so I looked at Bitcoin and I drew in a trend line on the weekly. On the weekly chart, I drew in a trend line. Wow, we're in a beautiful, when we draw in these lines, some people say, but they're arbitrary, they're subjective. Well, when you're using TradingView software, they're not that subjective, actually. And you can compare them with each other, and you do tend to get them quite similar. So what I'm doing here, look, I'm drawing in a straight line that has as many touches. This is a little bit more of a complicated one, but we're all into Bitcoin, so we want to know. Look, this is where the trend starts. And once I've drawn this in, we can see up, bounce, up, and we get touches. And what I'm doing is I'm trying to get as much touches of the body and the wick, or just the bodies, or just the wicks. And that comes down to just experience. And so when this little wick sits here, we start drawing in our trend line because we're pulling back, we're pulling up again. And when it comes down, I kind of lined up this structure, and we're getting these nice wick touches here. And then when I looked at this, I can kind of start to see, and I don't know if you guys saw the same thing. I saw what I call a double top, and what everyone calls a double top is where it's basically, if I put my little dotted line here, this is what freaked me out. And around the 65K mark, we had the price explored it in April 21. And then in November 21, we had, look, the body of this candle here rejected the exact same level, 6.5, whatever in a bit. It told me that that's potentially your opportunity to get out, because it has failed that level on a weekly. We've got what's called a doji, and a lot of you traders will know, a doji is an indecision candle. It's a candle that's got a very small body and very long wicks, because it's like, well, who's in control? Are the buyers in control? Are the sellers in control? It's like, what's happening now? That is ominous. You see, we had a doji here, tiny body, we went down. Tiny body, we went down. That's the pattern. Similarly here, doji, we went up. This is what I'm looking for. Ominous looking, small body candles with long searching wicks, not a good sign. And what I saw here was everyone said Bitcoin's going to 100K, right? People who are far more qualified than me. I sent emails out to people saying, I can see a big M and I think it isn't going to 100K right now. I think we're probably going to see some quite significant downside. What I was saying was, and who knows whether this will be right, we broke out of a weekly trend. And where do we go when we break out? Where do we go? Well, usually we go back to where the trend started. And I'm sorry if you're holding these coins right now. And I don't, again, I'm just a guy, could well be wrong. But generally what happens is wherever the trend started, that's my take profit. I go short here. Once we close outside, I often wait for what's called a retest where we pull back and we touch it. And then I take a significant short position. And I have a stop loss, which ensures that I never risk more than 0.5% of my account. Some people risk 2% of their account. I risk 0.5% of my account, which means that I am never prepared to lose more than $200 on a trade. But my potential gain is somewhere in the region of, in this one, 76%, if I'm right. And on the way down, I will take profits. Now, there's more to it than this. In my analysis, like everyone does, we look at what's called, and sorry if this is like Chinese to anyone, it was to me. The first time someone did this, I was like, what are you talking about? What's that purple line? Well, we have support and resistance, and you can see at the intersection here, this line acts as support. So it's bounced off our trend line, it's beautifully bounced at our support level, and it's bounced here. Price is really interested in this level because the candles are changing. Candles are changing to dojis. Candle changes to dojis. So this is a very, very important level. So I'm interested in potentially, if I'm in here, taking some profits here. Now, what happened with Bitcoin is it's now, if we move on to the daily, it's breaking this major neckline significantly. That is with lots of seller volume. That to me is a pretty horrible, horrible sign, ominous sign of what's to come. The original neckline was, of course, up here. And once it had bounced at the original neckline, and neckline is just the area, look, you've got two heads like this in our big M, and price came up, touched here, pulled back down, broke through, came down. This line is an area of interest. It was what's called resistance here, couldn't break through. And then when it broke through later, it became support. Support's like scaffolding, it holds it up. Resistance is like a brick wall, it stops it from going through. So I've seen that it's been support, I've seen that it's been support, I've seen that it's been support. So once it broke out of this trend line, this weekly powerful, strong trend line, and weekly stronger than daily, daily stronger than 4 hours, so on, so on. Once it broke out and then starts breaking this, now we start thinking Bitcoin might be in trouble. So at that point, I'm happy to take a short position with my take profit sort of being quite far down, take a short position here. And my stop loss for this trade was up right the way out the way. And I always have a black stop loss, deadly stop loss. So my stop loss was 53259 for this trade. We never got close to it. I was expecting the potential of a retest, we never got it. And I held that short position and took profits down, first profits down here. That is a very, very quick analysis that I've just shown you. Then I've drawn a lot of stuff. But the main thing I want you to take away is literally the thing that works for me over and over again is weekly and daily trends. What's it doing? Let me just show you one I did. I have no idea who CFR, Cullen/Frost bankers are, but they've made me money. And for that, I'm very grateful. So I looked at this chart. I draw in, I get as many touches as I can. And when I see something like this, I get pretty excited because I'm getting lots of touches of my line. Now, a minute ago, it just looked like nonsense. It just looked like fog. Like, what on earth is this stock doing? And now, from what my eye tells me, that from September 2020 until April 2022, Cullen/Frost bankers have been doing all right. Those chaps, they've been having a good time. Things have been going up. We've got bounce, bounce, I call that bounce, 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 break. So the more times the trend line or the support and resistance is tested, usually the more likely it is to break. We got 5 tests of that. So there's me sat there just watching it. And what did I do? I didn't look at Fibonacci. I didn't look at RSI. I didn't look at a damn thing. The only thing I did was wait for it to break. And I waited for a doji candle to retest my line. So it broke back through. It came up and it poked it. And then I enter a short position, and my stop loss is my 0.5% away, which determines my position size. My stop loss, bingo, is there in case we get a wick. Now, that position for me is still open, and my entry was here. So that position that I took is up 9.2% today. And that is called a swing trade. So I'm swinging that because my overall analysis tells me that there is potential for this to come all the way down to 61.57. Now, I'm not a maths guy, but my risk is 8.89% thereabouts, and my potential profit is circa 55%. That's what I'm looking. I'm not looking at the moment in this market that is crashing for scalps. I'm looking for stocks that are dead, that are showing me this pattern of fail, 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 break. That is the only thing. You know, it looks simple. It's because it is simple in terms of what I'm actually looking at, but it reliably works for me. Okay, there's nuance to this stuff in terms of how you get your entry, how you set your position size relative to your stop loss, so you don't risk more than the 0.5% or whatever your risk tolerance is. But really, I don't like losing money, so I wait for a break, and it has to be a daily candle at least close, by the way, and I wait for it to retouch it. If it doesn't retouch it, I don't enter the trade, generally speaking, unless I've got really, really good reason to. And so you can see how these things move. Now, I could give you a million examples of this. I did the same thing with CRM, Salesforce. I did the same exact thing. I draw in, what do we see? We got this beautiful uptrend. All I did was draw this in. I'm looking for at least 2 touches. And these touches, there's a wick and a body. I've got wick and I've got wick. And then I look at the line and I see what's falling on my line. Essentially a mini doji. That's what's falling on the line. So that gives me reassurance. That gives me reassurance that the line is important because it struggled, it broke through, and then it struggled. And then what did we get? Well, if we enter on the doji break, we get ourselves a nice 36% move. And that was another trade that I took. I mean, this, again, lots of nuance to how I'm entering them. And there's others, I'm looking at support as well, and the combinations. And if it takes you more than a second to draw it, no one else is looking at it and you're wrong, in my experience. So if it takes me more than a second to go, where's that level? Where am I getting all these touches? That looks pretty good to me. So here's my neckline. So if you want it to be ultra safe, there's the break. So now we're in a big blooming downtrend. This thing is just, look at that. We're going to see a big downtrend. And if you want it to be super safe, you wait for it to break the downtrend. Then you find the strongest level. We've got bounce, 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 bounce. It loves that level. Broke it, retested it with a little hammer. Now we enter our trade at the end of the day. I don't even need to look at any other part of the chart. Boom. And already, if we're being super safe, we're up 22.5% just from that.
Hey, hi.
Oh, Jennifer's there.
Yeah, okay. Listen, I don't even think people are going to understand what you're doing yet. So let's back up.
Okay.
Far
I don't even
back.
understand.
Yeah, well, I mean, you're talking about lines and things that, I mean, we've never done this. So tell us what a Fibonacci is. Tell us why you would even be drawing these. I mean, give us some of that stuff.
I think I've moved away from drawing Fibonacci. For me, right now, I don't need to. I just find if it's going in. I mean, if you wanted to, you know, basically a Fibonacci is, for those who want to know, you're looking for the high, and then you're looking for the low. And we can easily see, I don't know if you can see across. Let me just drag this puppy over here so you can see. Now, I'm using wicks because I'm on weekly candles here and I want to know exactly where the price ventured to. So I've gone back to the most recent low. That's the most salient low because it's touching here and it's touching here. And I just draw this thing in. And I've drawn it from the high to the most recent weekly low, the most significant weekly low. And what this tells me is if you want to, I sometimes use this for like, okay, where am I going to take my profits? Now look, if I take that line off that I drew, did you notice that it immediately got replaced by that purple line? What that means is that I was pretty much bang on the money to the cent. And this is just practice, hey? I just practiced looking at these things and drawing these lines. So I put that at exactly the 50% Fibonacci. These are the magic numbers. You can look these up. I'm not going to go into what these numbers mean, these retracement numbers, but stocks respond to them because they are algorithms. It's computer software. So you could say, now we're looking at it, these Fibonacci levels are where the stock is going to react. Okay. And a lot of the time, some of them, the most important, the 23, this Fibonacci here, very high probability that something will pull back. It'll hit it and pull back. So you might, if you were a scalper, you'd wait for that and you might take a long position off that. I personally wouldn't go long when something's dropping like this. So we've got these levels that basically drawn in for us. You can see, look, it's reacted to it here. It's reacted to it here. The body of the price of that candle is sitting on it. These are sitting on it perfectly. This one's sitting on it perfectly. And what that means is that we drew it right. You know, if the price is reacting to it, you're drawing what other people are drawing. And so that probably is the top. And we're probably, if we break this, the chances are we're coming down to here. If we break this, the chances are we're coming down to here, right? This is just mathematically how they work. And that's as far as I go with the Fibonacci. I mean, I'll use it to, if I've entered the trade, say up here, I will use, sorry about the pop-ups. I will use that to take profit potentially here, maybe, 25%. And then I might want to take profit here, depending on how volume's looking, how the order book's looking. There's many things that we take into consideration, but they are all very, very simple things. So that is essentially, I don't want to go into any major detail, but this Fibonacci will work on everything. You throw it onto Luna, and it will show you, I've not done one on Luna, but it'll show you exactly the same stuff. I mean, Luna's dead now, isn't it? So let's see if it reacted. So that's the new bottom for our poor friend Luna. And yeah, look, here we go. So it takes 2 seconds to draw it in. If it takes any longer, you're overthinking it and you're doing it wrong. Look, struggling to break through. It's respecting these magic lines. It just respects them, and it does it here as well. So once they're drawn in, it can help you. I don't rely on this a lot. I just draw my own lines in, but it can help you figure out what might happen to this stock and what stage it's at. Nice and safe to start taking a short position. Once we've broken higher up, you don't want to start shorting it down at 38, 23, because there's more probability of a bounce. And so with Luna, I did the same thing. I draw a line. That's literally all I'm doing, guys. I'm just drawing lines over these candles. Okay, you can see a lot of red here. I'm drawing a line and I'm going, okay, February 2022 up to April 2022, we have a beautiful uptrend. I've got a 1 touch, I've got a 2 touch, 3 touch. I'm happy with that. So my analysis tells me if we break it daily, well, I'm in the daily now, each candle represents a price action of the day. If we break it, we're going to see a nice move down. Now, it doesn't always just drop. It'll go like this. It might come back and retest, and then it might but I'm not in a hurry. I'm not in a hurry.
Christian. Sorry, yeah, just to chuck into there. So most of everybody that we've got in here are long-term or looking to be long-term hodlers, of their coins.
Okay.
So long positions, like uber long positions.
Great.
I'm hoping this may inspire some people, obviously, to come into trading. But obviously, we are collecting our crypto to move forward. With with regard to trading, like Jennifer was saying, from something like this with the pattern formation, what do you, I know you're using the lines and I say we use the patterns as well. How far back do you go with your kind of pattern formation when you're looking at these kind of stocks and shares and things like that? The same as with, and you made a mention as well about how you noticed the correlation between the SPX and Bitcoin, for example, and things like that.
Yeah, so to answer the first question, I will always start by looking at the monthly chart because it just gives me the bigger picture. A lot of new traders fail to take into account the bigger picture. I want to know what it's done throughout its whole life. I want to understand its personality and really see it. And then I'm not going to draw, very unlikely to draw lines on the monthly, but certainly on the weekly and the daily, I want to look at the last rotation. You know, this is played out, and this has happened now. So I'm looking for, where did it start its last daily and weekly trajectory? And like, to my eye, it's fairly obvious it started here. And so, you know, I'll find that point, and on the daily or the weekly, and then I'll find that where is essentially the top of this bit, right? So up here like this. And that is it. But I'll look back as far as a month if I have to, just to get an understanding of what it's likely to do. But I would have, if I was holding Luna and I'd have had this drawn in, you know, I'd have been moving it all the way up as well, by the way. I'd have constantly been moving that just to get an idea, because, you know, if I had volume on here as well, I'm looking at volume over the course of the days and weeks, and I'm less concerned about these types of candles. I'm very, very concerned about these long red candles. That would have been my sign, when was that, April, to go, yeah, okay, I'm happy with my profit. Because of course, when would we have got in? Well, you know, it's if you look at where those kind of supports are going back, we're looking at these levels down here. Touch, 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 touch. So probably you can start, when it starts failing to break further down and volume picks up, you can start to look at, if you want to hodl long term, you're like, okay, we're getting lots of rejections on the daily and the weekly. It can't push it lower. We've got support, so I can buy. But we just want to be regularly checking in, like, okay, what's the pattern looking like? You know, you can move these things around, right? And you can kind of get a feel for, and it comes with practice, you know, the big scary candles coupled with volume. And of course, I'm looking at time in sales, level 2 data. Personally, I don't think you can trade without looking at level 2 data. So if you don't know what level 2 in time in sales is, look it up, and you can subscribe to those providers who will provide you with that market depth data, so you can see all the real-time buying and selling going on. I think that's all crucial if you're planning on doing this kind of thing. And what was your second question? Sorry, Vix.
Yeah, I'm trying to think. So as I said, stepping back to try and build up some of the language for some people that we've got who are really new to the whole space. Things like you know, we talk about the longs have been kicked out, you know, or the shorts have been wiped out, and that kind of behavior, you know, and the battling between those behavior. And I know obviously where you've shorted it all the way down, you and I know what we're talking about, but you can speak to me like I'm a 5-year-old on it, just to help.
I'm 5-year-old mentality as well. It took me a very long time, lots of reading and to try and get my head around it. But if I think the stock is going to go up here, or the coin is going to go up here, I'll take a long position. Or best way to think about that when you're starting out is just that I'm going to buy it here. Yeah, and you know, if this was I don't know, some sort of gadget like a computer, and if I think in April it's going to be worth more money, I might decide to buy 100 of these computers because I know that I can sell them in April. So that is me going long. I'm buying. At this point, I make the decision of I think this is going to be worth less in the future. Based on my analysis, I think this is going to quite quickly become worth less. And so I'll take a short position. And that basically means my analysis is telling me that it's going to depreciate in value. And my short position will be worth more the more it goes down. And what you're really doing is borrowing shares from the broker and you're selling those shares, okay? And the difference between what you sold them for at this level and what you buy them back for down at this level is kind of your profit. But that's weird to get your head around. So
yeah,
going short,
other advancing, it's only because obviously where we flippantly talk about long and short, because we understand where we're stepping into the market and out of the market. Yeah, for most of our crypto guys in here, you know, we're all like, yeah, long-term holders. So as you said, and leveraging, it's something we don't ever recommend to anybody, like you said, unless they've got massive trading knowledge, because it's just a dangerous game where you can, if you've leveraged into the wrong, where you've leveraged long and you've hit that red and everybody's shorting it, you know, you're wrecked, as they say.
Well, I don't know if you're wrecked, because if you have the risk strategy. So just to give an example, someone, when I originally posted in the group about this, someone said to me, oh, they never tell you that you can also lose lots of money on a trade. That's just categorically not true, because you know, I'm making a living out of it and I'm living proof. So let's say I just want to put that straight, even if the position's leveraged, use a position size calculator. There's millions of them online. And what I do is I type in, I'm going to go short. Let's make it easier. I'm going to go long at 50.515. And I want to put my stop loss, and a stop loss will kill my position at 43.645. And I tell the computer, I don't want to lose more than 0.5% of my account. And it knows how much my account is. So it tells me, okay, so you can only afford to buy, based on your account size, you can only afford to buy 20 shares. If you're going to put your stop loss there, mate, you can only afford 20 shares. Then I know for sure, I don't even have to think about it. If I'm wrong, it gets to here, I lose $150. But if I'm right, it gets to here and I make, you know, whatever, $10,000, whatever it ends up being. So it's all, risk management is always missed out. No one online is really talking about this risk management. And without a position size calculator, and you have to type in, what's your risk tolerance? You know, some people say 2%, like 2% milk. You don't risk more than 2%. I don't risk more than 0.5% of my account. So, because I'm just not prepared to lose more than, so I can be wrong way more than half the time. I could be wrong 90% of the time, and I can still make money with this ratio. And you can, there are tools in TradingView for long and short positions, and I don't want to freak people out, but that can work. They do all your calculations for you, right? Here's my stop loss. Here's where I open the position. It will tell you everything you need to know, your ratio, you know, your win-loss ratio, all that stuff. It's all calculated for you. So you can't, if you've got a really good stop loss, a really tight stop loss in the right place, and you've already set how much you're prepared to lose, that will kill your trade if you're wrong, and you will not get liquidated. Not worth leveraging and using margin and things to trade to start with. You don't need to. In actual fact, I'd go for the first 6 months to a year, just using you can demo trade on this. These are trading buttons, so you can paper trade with fake money, grow a fake money account first if you want to trade. But certainly in terms of buying a coin, I mean, Luna's pretty cheap right now. If you want, it's on sale if you want to buy it. But in terms of buying something, this is just, for me, of paramount importance to understand. You know, you don't want to be sitting holding Luna here, going, oh well, it might come back up, because you know, using financial vehicles with hope and emotion is definitely a way to lose money relative to you know, having a trading plan and a strategy that you can adapt with time. And so that's kind of what I've been teaching. Since it's been working for me, I thought I should, in the nature of karma, I should share that knowledge to give that kind of financial freedom that I get to have. So, but is there anything, I think I've covered the kind of things that I wanted to say, other than the fact that scalping is trading over seconds, minutes and hours, whereas swing trading is trading over like hours and days and weeks and months. So this that I'm showing you right now is swing trading. Scalping would be going on the 1 minute and the 5 minute, looking at tiny price movements and trying to take a chunk out of this and a chunk. And I took a lot, trust me, I took a lot of chunks out of this on the way down because you can see these necklines. What was going to happen here, guys? It was going to drop, right? What was going to happen? And look at that neckline. What was going to happen here? Bounce, bounce, break. And this happens to be one of my biggest entries. And we took it all the way down. I didn't get down to the bottom. I stopped out I took profit somewhere down here. But it was so simple. It was so simple. As soon as we had the break. So that's the kind of thing I'm teaching. I'm trying to keep it super, super simple. So if you're kind of dumb like me, you can still win more than you lose. So if there's any questions.
Yeah, we've got, oh, go on, Jennifer, sorry.
We need to make sure this is clear. So long as when you're expecting it to go up, shorting is when you're expecting it to go down.
That's right. Yeah.
Software can be your best friend as well. So what trading platforms do you use start out, and where would you recommend if people wanted to play with fake money to get a swing of how this works? Or have
cool. Yeah, so if people have got a pen handy, if you're interested in this, you've got a pen handy, start with tradingview.com. You'll have a free account. You don't pay for it initially, just use the free. And you can actually go into the brokerage bit down the bottom, and you can set up paper trading. And then when you think something's going to go long, you press what's going to be the green button. And when you think something's going to go down, you press the red button. And in the middle, you type in the number that you want to buy or sell. It's really simple. I started with go long and go short. It's the best way to do it. Then I moved on to using IG.com. I don't trade with them because I don't like the spreads that they add, but I do like they've got a fantastic, it's also free, IG.com, got a fantastic piece of software. You can trade on the charts with them. It's really good for typing in limit orders, learning the difference between a limit order and market order. You can move your stop loss on the screen. So like live in real time, I really rate their software. And if you want to get more technical, but you still don't want to pay any money, use IBKR. IBKR, there's a paper trading. It's also free. It's a little bit more complicated, but you can start to play with more complicated orders, and you can start to, if you want to, play with options. Now, options contracts are a whole complicated world into themselves, and you could study them for a year and still not have a clue. But they're another financial vehicle. You've got contract for difference, that's your CFD, on your capital or trading 212. You've got spread bets. So these are all ways of placing a trade, right? A spread bet, you don't pay capital gains tax on. So, but the spreads are worse. And if you're me, I'm trading stock and options.
Who needs to mute their mic? I wanted to ask, so you're throwing a lot out there, and I'm not sure people know all these terms. Level 2 data and all these different techniques. I was wondering if maybe you can just take a minute to talk about each of the different ways. When you mentioned different people use different tools for reading the charts. So we mentioned the Fibonacci, you mentioned leverage trading, the futures. Maybe can you talk maybe just a basic about RSI or MACD, or how, if you're looking at something and you don't have time to draw lines, but you can, read a chart based on, candlesticks and wicks on the 15-minute, 1 hour and 4 hour. I mean, are there can you speak to those things?
Yeah, I can give away a couple secrets. So let's say, am I in the right one? So the major things, let's see what we've got open here. I've got my regular chart. I've got lots of different settings saved. So your RSI, now this is I don't want to scare people. I don't think you need as much as what I use, and I teach it to people who want to know it. So your RSI is a relative strength indicator. It's, in my opinion, out of all this junk here, it's the most important one. And if I just pull it down for you, it's basically following the movements of the price. And you've got, when it's at the top, you can consider that the stock is in an overbought position. That means too many people have bought it and that sucker's got to come down. And you can see what happens when it gets to that 70 dotted line, 70-ish%, it drops down. And that usually corresponds to a drop in the stock. So do you see where it hits the top here and it comes down? That had reached the top and it came down, and we get some red candles and it comes down. And you see here, it's at the bottom, it's oversold. And so boom, we get this move up, and that corresponds all the way, this width corresponds all the way across here. And again, the same thing now, it's overbought. And so it's going to come down. Now, the degree to which it comes down and up, that indicator is not going to tell you that. The way I use that is very nuanced and very complicated between the different time frames. And I could spend a whole session on how I use it to manage a live trade if I'm scalping, and how I use it to enter a trade on the higher time frames. Very, very, very useful. I won't go into the stochastic. The MACD is, for people who are new, I mean, you could look these things up. My favorites are the money flow indicator, which is MFI, the MACD, moving average convergence and divergence. I like that too, but not on the lower time frames. I'm talking higher time frames and stochastic. Now, I've got like 3 different chart setups with all sorts of things going on, and we could just it would take us a long time to go. That's why I teach one-to-one sessions, so that, you know, teaching one person, they can just interrupt me all the time and ask questions. I use the SMAs, the grandfather moving averages, big lovely lines, to catch breakouts like this one. You know, I'm using the EMAs, that's the exponential moving averages. VWAP, everyone loves VWAP, the volume weighted average price, beautiful for breakout, retest, go. That makes me money. And what else? And I've got some bigger moving averages and things. You know, this stuff, you could just get lost in this stuff. I could load, I've got lots of chart setups, and I've got a separate one that tells me about volume. You know, how many people, we can pull up histograms on the charts that shows me exactly how many people are buying and selling. Yeah, we might have some sellers, but how many? You know, this volume at the bottom for me isn't quite enough. So I like the histograms, and I also use Person's pivots. You can look, that's PERSON, look up Person's pivots as well. And I've got my own custom settings to pivot points are like Fibonacci, price reacts there, so you can use them to take profit. I mean, this is a rabbit hole, Jennifer. So
is that we need to make sure that we're very clear with people on that these are lots of different tools. This is not about you trying to learn them all at once, nor trying to explain it. But when we hear these terms, and for the most part, the majority of people in our channel are long-term holders of crypto. And, you know, I've been very clear to stay away from paper stock and, you know, just stay until it tokenizes over. There are people that just can't get enough of this. And, you know, so what I'm trying to do here in this small hour we have is to break down some of these concepts, the vernacular that is used between the two. Because when people are constantly hearing shorting and longing, I mean, what does that mean? So we've discussed that. Now we're looking at a bunch of different tools. You know, all you have to do if this is something that somebody wants to do is start with one. You don't need to have all of these. Start learning one really well. Like for me, I learned from Vicky, who learned from BC. I mean, we learned how to like take one little tool that we apply, you know, the Fibonacci, if you like that, or watching the map. I love the volume trading thing. That's a big indicator for me. And you don't have to necessarily be technical to understand that when you see a lot of people buying something, you know, it usually means that there's going to be some kind of lift off, or, you know, the RSI indicator is also really interesting because you like you said, you can see that just flows, shows the flow of where the potential breakouts that, you know, might come.
I want to talk a little bit, so I don't want people to get caught up on all these tools. Mentioning this fancy words is not to put you off. I know those in this channel will be certainly drawn, if this is their type of thing. But I wanted to make sure that we're mentioning these things so that people can learn what resonates with them, what's easy for them to see on a chart, right? And some of the exchanges like BitTrue give or Bitfinex is another one, very small trading windows. TradingView is another great one to apply and, draw these lines and use these various tools so you can spot repetition and your eye will start learning the more you use. But all you have to do is start with one. Now, before we go get bogged down, I want to just talk about the wicks. Can you talk about like when a wick closes versus, and green means up, red means down, but just talk about like just sight unseen when you see a chart, what you can learn about the basics of wicks.
Yeah, what the hell are those wicks about? I remember looking at them and thinking they're crazy. What's that?
Yeah,
so I like you say, learning it in bite-sized doses. I learned one indicator a day, one type of candle thing a day for a very long time. It's one thing a day or one thing a week. I'm a dad as well. I'm busy, got stuff on. So it's not a race to learn this stuff. So the wick. So you've got the body of the candle and then the wick. So it looks like a little candle that you would see. If I zoom in, the wick this is what's really interesting. The wick shows you that where the price got to during this rotation, right? During this time period. So I always like for me, it's easier to think about things in a day. I don't know about you guys, but just a day is nice and easy. Let's pick one that's got just one wick at the bottom. So this red candle, obviously the price opened up here and it came down. It's a big red candle. So if you were long, you're not happy with this guy. But if you're short, you're rubbing your hands together. It opened here and it comes down on the body. And so that's where the price closed for the day when it went ding, ding, ding at, what's this, HD? So 2:30 in the afternoon, the New York Stock Exchange, ding, 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 opens here. And at the end of the day, we get the ding, 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 and it closed here. But during the course of the day, the price made its way all the way down to 289.76. If you see the black mark on the ticker on the right. The wick just tells you how far the price actually went. Now, there are candles that actually don't really have wicks. And then there are candles that have really big wicks. The way to read it, just from a layman's point of view, if you're like not super smart like me, is look, on this candle here, lots of people like really wanted to push the price down. So the price came all the way down on this long wick here. They pushed the price down, but there were sufficient buyers, that's people going long, before the end of the day to make sure it closed all the way up here. Look at that. It closed despite the price. If we go into the lower time frames, let's go into the 15-minute time frame. What you see is loads more candles. And what you'll see is what is actually happening is we've got these are all 15-minute candles. So the wick is full of all these guys, all of this noise. That's what the daily wicks are full of. They are full to the brim of what the price did on the smaller time frames. And if you're swing trading over longer periods, you're less interested in that. You're more interested in the bigger picture. So, and what you find is that small body and big wick usually means a change in direction, right? So look at all those sellers, ton of sellers, open it, closing it, big. That's a strong, apart from the wick, it's a strong candle. If a bit of a smaller wick would be stronger. And then we get weaker and weaker, and you see the volume goes down. This is a histogram for the volume at the bottom. That candle had a lot of sellers. By the time we got to this guy, the sellers are right down now. And we've got a doji, and that's D-O-J-I, if you look that up. And what that means, the price got down, but the body's tiny, and it's like, the sellers are losing control now. They opened it here, and it closed, and it closed just down here. It barely moved that day. It was a very boring day for Home Depot. And that indicates to me that it's bouncing off my trend line. So that's when I will then go, lovely. We've got more volume on the histogram, more buyers, nice big candle. I'll open my long position and I'm going to wait for it then to go wherever it's going. I haven't got the upper end. Normally I have a channel drawn in, so I'll wait for it to go bonk on the next level. So that, if you were just trading on the daily and you took that bounce, would have brought you, you probably would have taken profit up here because you would have got bored. But yeah, I mean, that is ultimately it. It just means that the price went that far, but at the end of the day, or the end of the time period of the candle that you're looking at, it actually, it closed further away from that price. Yeah, so that's a weak candle. That's a strong candle.
That means there's going to be a flood of buyers coming in that push the price up, and the sellers no longer control. Okay. And then the green wicks where you see it go up and it doesn't quite reach. Does that mean a lot of sell pressure down? Sure.
So yeah, what you often see is at a level of like major importance. Let's just say there was a level here. Oftentimes what you'll see is the stock will come up and the price will break through our resistance level, a level that the buyers just can't break through. They just can't get through it. Usually it's a whole number like 300 or something, and it will come up and it will pull back down and it will test it again. It'll come back down, but the body will close below it. And loads of people have gone long on the smaller time frames, the 1 minute and the 5 minute. They're gun ho. They've got leverage positions. They've gone long up here somewhere in the wick, and then they've been stopped down because their stop loss would have been below here. You know, if you don't know what you're doing, that's what will happen. And so the wick just shows you where it went during that day, and then but the actual closing bid was below the level. We just didn't make it, and it was only that candle that actually made it over there. So that candle close tells me we're going to get a continuation in that direction. Does that kind of?
Yeah, and can you speak to how people use the various 1 day, 15 minutes, 4 hours? Like, what's the difference there? Just to see the, you know, to make those swing trades, you know, is it a tighter trading, or are those further indications of pattern and, you know?
Yeah, well, it depends what your goal is. I mean, with crypto, the 1 minute is basically, the 1 minute time frame basically means nothing. I mean, it's just noise, in my opinion.
Sure.
With crypto, because there's just too much volatility and too much movement. But hey, if you're trading, let me pick a good example so we can look at the time frames. Maybe not Coinbase. Let's go on. Let's have a look at the 1 minute time frame. So each one of these candles, represents a minute's worth of buying or selling. And if you wanted, let's take a good example. This is probably a good example. So we got a Fibonacci level in. The price really likes that level. It broke below it easily there. That's what I'd call parabolic. That's untradable. Lots of people thought it was tradable, I think, but I don't trade parabolic, big, fast moves. I don't trade that way. I like retests. So if I want to go short here, you might say, bearing in mind on the 1 minute time frame, you might wait for it to break through, wait for it to come back and retest, and then take a short position here and expect a big move down. Now, let's say this was on the daily time frame. Let's see these were daily candles, right? If it's come up and it's done that, you might then go to the smaller time frames to get a very precise entry, right? So if those were the daily, and you come down to the 1 minute or the 5 minute candles, and you're watching it on the 5 minute, and you're like, oh, I'm waiting for it to get close to this line. I want it to close outside this line. And so people who think that this stock, Salesforce, is going to stay below this level will have been watching that wick there on the 5 minute and potentially taking a short position with the idea that we're gonna go down. It's the 1 minute is less reliable than the 5 minute. The 5 minute is less reliable than, say, the 9. I've got here? The 15, the 30, the 45, the 1 hour. I mean, I'm at the moment, because of what the market is like, it's being naughty. I'm not trading on anything lower than 1 hour. I'm not even really looking at it. And as you can see here, you know, the 1 hour gives you a much clearer, in my opinion. I know people who trade the 1 minute and the 5 minute, and when the bell goes at 2:30, they're only looking at 1 minute candles, and they're like, enter, exit. You know, you're talking about holding, and I very occasionally do that, but not in the market right now. You know, 30 seconds, they'll hold it for 10 seconds. They'll hold options for, and then, you know, execute those, and that's it. And that's the day done. I don't trade that way. I don't like trading that way. I find it quite nauseating. But everything, all of the trend lines and all that stuff that works on the weekly and the daily also works on the 1 hour, the 2 hour, and the 3 hour to varying degrees. And it just comes down to finding your own strategy that you like, that works for you. Really, it's personal preference. Everyone trades completely differently. I just like the confirmation of the higher time frames, and I think the 1 minute is essentially just noise, and it will, you know, if you're wanting to get a rejection here and take this stock short, if you enter on the 1 minute and then your stop loss is really tight and it breaks above, you know, you'll get stopped out, and then of course it's a fake out and it's going to go down. I like proper higher time frame confirmation more generally, unless I'm very sure, you know, and that comes with more experience, in my opinion.
I like this. Thank you, because you know, they are just quick little ways, guys, that we're trying to teach, or just, you know, go over, so that when you're looking at a chart and you're seeing these candlesticks, you have a little bit of understanding, fluency, if you will, of how they work. Because I've learned a lot just by watching the wicks and the time frames. For me, I like the 15, the hour, and the 4 hour. But that's, I mean, I've learned that from Vicky. So, and I've, you know, been learning how to read these charts based off, you know, just a few indicators, volume being one, you know, that we just mentioned. But the key is not to try to take them all on at once. And this is why you get such variance of opinions within the trading, you know, space, whatever you're trading, because people like to use the different tools and, you know, use them differently and have a form opinion how they work. Vicky, do you want to say something to that? And then maybe we can open or answer some of the questions. Like, what do you use, Vicky, when you're doing these?
I use a lot of stress. No, as I go through, I use I'm split between Binance and TradingView. I do like those two platforms, and I use TradingView as a confirmation for my Binance. And as you know what I'm like, I screenshot everything. Mine looks like a child took a crayon to it because I'm terrible for trend lines. And as you were saying, Christian, with the lines, drawing them in and seeing how many times it bounces, for me, is looking for those two good bounces against the and if it hasn't got through on the third or even made an effort, then you know it's going to be rejecting, and that's, it's not getting up anywhere. So but for me, it's, if in doubt, zoom out. I like looking at the real long term. So I like looking at comparing from 2017, or if whatever the chart data will get us back to, as far back as the coin started, and how it followed, and how it follows other kind of coins. I know you were saying between the stock and Bitcoin and stuff like that, but we have similarly with individual coins, it seems, within the crypto market, you'll see one go off and it will take another. XRP and XLM, for example, seem to follow quite closely and map quite closely. So you can generally pick, you know, pairings like that. Obviously, a lot of the crypto market is forked off of Bitcoin and will naturally follow that anyway. So you would only need to watch one massively there until we get the altcoin rotation. So when it comes to trading and things like this, I suppose you don't know, it's harder in that comparison, because we're all holding our coins for so much longer, and we say to them, they're like, when's altcoin season for us? I mean, does stocks get a kind of a season?
Do they
rotate in the traditional way that we do with crypto? I know a lot of people say they're so different, but then you say they're quite similar in certain pattern formation.
And do they
to bounce off the lines like they do in crypto?
With the support and resistance. Yeah.
Stocks are way easier. I would never ever trade like this with crypto. I think it's dangerous. It just doesn't follow the same rules. There's so much, you know. I think there's a lot of, maybe it's because there's a lot of novice trading, and it's very easy to just open a Bybit or a Binance account. You know, it's not, you know, it was much more difficult for me to open an account with my Chicago stockbroker. You know, that was difficult. And of course you have like the pattern day trader rules and stuff. So my stockbroker, if I want to be a day trader, you can't have less than 25,000 US dollars in your account, for example, because then you can only place 3 trades a week. So there's, you know, there's things that will deter people from stock trading. And you know, just to give an example, we were talking about the different timeframes and comparing this to crypto. This is a stock. This is Costco. Costco has just bounced beautifully. This is the 15-minute time frame. You would never see this with crypto. Just talking about when would I go from the daily to the 15-minute candles, came down, bounced off a major daily weekly trend line, gave us the bounce, the test, came out, gave us the retest of the neckline to a T. I mean, that 15-minute candle couldn't get any better. And you see the body just stops there. So we've broken the trend line. We've got the support is now become resistance. And for everyone who missed that retest, Costco came up and gave you a second go. It gave you a second chance. And if your stop loss was, you know, inside the trend line, you're safe as houses. You just don't see that from my limited experience. You don't see that with the crypto market. Come down, retest. And then we just have, you know, we have the move. And look at this move, guys. I mean, like it's a very high liquidity and tradable financial vehicle. If you got in at the retest, let's say you get in just a little bit lower, you know, you're looking at for a day trade, you know, 6.5% move. You know, you could be doubling your account. I mean, this is just remarkable. Looking at Bitcoin, the wicks fly up like crazy. The wicks are like heat-seeking missiles, seeking stop losses. And if you look at Costco, it's gentle. It just doesn't do that. You know, I mean, okay, that's a big candle relative to, but it's very low volume, and so we're not so worried about the continuation. Look at this thing, and you know, it'll probably keep going. You know, and that was just a breakout. That was just, again, this big channel. You know, I drawn in a channel from March 2021. I got loads of touches, and bang, yeah. I'm on the daily time frame. I'm like, well, when am I supposed to enter? When do I sell? I click on the 15-minute time frame. I wait for my retest, and I click short, and then I, you know, stop losses up here, and then I just watch the numbers go up. And you know, I don't want to make this out like it's easy. It's not. There's a lot to learn. It's not that easy. But if you're prepared to dedicate yourself to it, there is a lot of opportunity. Bitcoin, on the other hand, I think this thing's mental. I mean, I do not trade Bitcoin ever. And some of the wicks that I've seen on this, I think less so today, but we've had some, I mean, look at that. That's the stupidest thing I've ever seen in my life. Look at this wick. I mean, what's really going on there? The wick is way bigger than the body. And yeah, I'm not prepared to risk any of my money trading stuff that's doing things like that, man. And I think it's, yeah.
Scalp trade with Vicky and I, because we use Bitcoin a lot. And right. You think Bitcoin's crazy, you should check out Shiba Inu.
No.
Jesus,
no, I'm good. I'll stick to stocks.
Hey, look, guys, this is the point. I'm not a stock trader. This is like no interest in me for stock trading, but I love what you're saying because the foundations are the same. I can see it being easier. I can see it being something to sink your teeth in and to understand better, you know, how, I mean, I love that little bit you did on Costco there. I thought that was great because using these companies and being able to call when they retest and like, that's awesome for those that, you know, want to get into this. So definitely seek out Christian if this is something you want to do further. But don't, at the same time, I also need to say that, you know, trading crypto is
definitely not something to be shy from. I mean, sure, that it's a little bit more insane, but there's ways of doing it and making a lot more. And I find that we can still practice safe crypto trading, even though we're not exactly a trading channel. Most of the people on here are buying and holding, so it's not about the everyday prices. We're buying digital assets for the new financial future. But in the last year, I mean, ask Vicky how many times I'm like, when's, XRP gonna, go back? I'm like, we need to retest this shit. I want to buy in, and then riding Bitcoin up and then scalp trading out to turn back into XRP. You might look at that and go, hell no, no way, not for me. But I mean, like, when I need to make back my money, or if I'm making a one crate, like she said earlier, a drunk trade. Sometimes some people eat when they get stressed out. I trade. And
that sounds like a terrible idea. I don't even drink. I mean, when I dedicate my life to this, I gave up alcohol years ago. I won't even have a coffee when I'm trading. I exercise, meditation before I trade. I mean, this is, if you really drill into it, it requires great discipline to get this right, and to trade in the absence of emotion, purely pragmatically and logically. Emotion will kill your trades, and you'll stop them too early, I find, or freak out on the 1 minute candles, or all of the mistakes. So yeah, there's a lot of, for me anyways, a lot of discipline that comes with it. But there's a lot of, I mean, there's me saying I wouldn't trade crypto. I shorted the hell out of Luna, leveraged 19 times the other day. But that's rare for me. But if you're good, maybe it's just because I'm not good enough.
No, but I mean, like, in our defense, we use the charts that I put together in order to settle emotions and kind of look at those pattern formations where we are heading either up or down. If it's positive, is it a good time to make an entry buy for your longer term hold, so you're getting that dollar cost averaging. So the way we use these charts on the most part is for that, how we can make the best value buy to add to our portfolio to maximize our number of digital assets and coins and dollar cost across. So it isn't all about those quick sales for us. But also when we come up against things like Luna has just had, we're kind of prepared. We had that expectation. So where I've said before, I have a prediction on patterns that XRP will hit a 17 cent. I might be right, I might be wildly wrong, but I am ready for it if it happens. And so I'm not having a panic attack when it drops 60% in one day, because I know it's going to come down and test, and it's due to go off if it follows that format and goes on from there. But yes, to inspire people to take it into trading and the confidence on a slower time scale, the stocks. I mean, I've got a couple of stocks, but I've never traded like this. But I'm very intrigued now, because I think if I can manage crypto, I can possibly do okay.
So you are amazing at this. I mean, how many times has every other crypto influencer called it, and you're like, no, my chart is my chart, and boom, we will hit 62 again. So I mean, this girl knows what she's talking about, and so I mean, I love it, because everybody's got a different flavor in this. Like I said, they all use their different tools. One is not better than the other. They're all, it is all really subjective. But I wanted to just present the narrative, or at least intro to trading, because I think it's a great part-time gig. Like you said, you've been able to, achieve financial freedom on your own time, learning these key indicators. I want to ask you quickly on the leverage trading, and then I know there's questions in the chat, because why would a company do a reverse equity split? I mean, I've Googled it, all this, but I just want to hear what you say. When you see like stocks, is that a liquidity thing? Is it to basically
a stock split? I have absolutely no idea. To me, it doesn't make any sense. It's like it's half the price, but the amount you're buying is the amount you're buying, right? It's still the same amount that was. I've never been able to get my head. Amazon did it recently.
Me too. I don't get it. Okay, I'm glad that
I saw that, and I've tried to listen to different people, and they say the same thing. They're like, well, the amount that even if you're just buying a portion of it, like however much it goes up over time, the relative change that you're going to get in what is just contingent upon what you put in. So it doesn't matter if the stock's split. you know, I don't know. I don't pay attention to those things. Again, I'm just looking at patterns, reliable patterns on the screen. So if Amazon are doing a split, I'm like, you know, unless it's near my green line, I'm not even going to look at Amazon. And I generally don't trade Amazon either. It's very expensive. So
I had a little a radio streaming site that I built that a big, you know, these bucket shop brokers came and like took me on, and then they, you know, we made it a pink sheet so they could trade it over the counter, those really cheap stocks. And at the time I was 23 and I was just excited that Silicon Valley was even interested in what I had built. But what they had totally screwed over the company, and I had no idea what they were doing, dumping these they had split the equity and they were just like hemorrhaging it. So they were selling off, even though there was, you know, millions and millions of stock, little shares to give out, they became worthless because of how they drove it down. And there was that reverse equity split. And so I've always asked people about this because I will never understand. I mean, obviously that was above my head, but I'll never make that mistake again by, you know, producing a number of shares and allowing them to be split even further, which just drove down the price. And ultimately, you know, the stock never recovered, which,
wow.
Yeah. All right. So do we have any questions in the channel, Vicky? Do you want to?
No, yeah, we've covered kind of everything you fed it into as they've come through. They've been picked up. The only other one was Bollinger Bands from Tracy.
Oh, Bollinger Bands.
Oh, yeah. Like the Bollinger Bands, I don't use them a lot, but what the Bollinger Bands are basically, you've got three. I'm not going to bring them up. Just in the interest of brevity, you've got basically three lines on your chart. You've got an upper line, a lower line, and a middle line. And the Bollinger Bands are, for those of you who understand what a normal distribution is, you know, a bell curve, the normal distribution. If you don't, your trading will go up exponentially if you understand the normal standard distribution of the bell curve. So the middle line is the mean, the upper line is 2 standard deviations above, and the lower line, from my understanding, is 2 standard deviations below. And generally speaking, it works best on the higher, from what I can see, on the higher time frames, and particularly on the daily. Once we come outside of the 2 standard deviations above or below, we usually get a regression back to the mean. It's just mathematics. So we come out of 2 standard deviations above. Now where it's what you would call an outlier. It's an outlying piece of data. It doesn't fit in the normal distribution anymore. And so it's going to come back, it's going to regress back towards the mean, because that's how numbers work. And so you would say when it's come out up the top, I want to short it back into the middle, and it's come out at the bottom, I can expect a move back up to pull back up towards the mean. Very narrow Bollinger Bands that are squeezing together usually indicate that we're going to get some sort of explosion. It's like built up potential, like a spring, either in this direction or this direction, I don't know. And then they sort of widen out with a big move. So I seldom really look at Bollinger Bands, apart from maybe on the daily if I'm thinking about taking a relatively big position. But yeah, Vicky, hopefully that answers it.
And you see, like when they go under, like usually they have to, when we're about to go off, they're under the wick, the candlestick.
Yeah, when I'm looking at them, yes. I mean, I like working on the moving averages. I'm quite a fiend for the moving averages, as you know, and looking at how we're coping with the 7, the 50, and the 200, and look at kind of rejection potentials within those kind of areas more than anything. That's kind of my pattern on that, because I normally say, don't know, oh, we've got a cross there, and the cross will indicate that we're going in a certain direction, you know, and that support underneath is going to drive them up, and as soon as they recross that way, you know, I'm not very good at articulating how I read my charts.
But it works for you. It's all different for everyone. Yeah. You've got to find your own strategy, find the thing that works for you, haven't you? That's kind of what it's about. Learn from everyone and put it together and find your own style that works.
I think it could be quite intimidating when you're watching such big accounts on YouTube, when it comes to how much you know. And it's been, as Jen has said, decisions that I have made or calls I've made have been kind of vindicated throughout. But right up to that point, I'm still like, oh, and she'll be like, which way is it going, Vicky? What? And I'm like, oh, don't put me under pressure. And then I panic because I'm like, oh God, if I give you the wrong information and I'm wrong. But then I've been right most of the, like 95% of the time. So it's just, and it's relaxing with it and going with it. And like I said, you know, once you get to grips with how you've set out your charts and you see where it's going, you kind of like step back. Aren't I, Jen? I'm like, Jen, just breathe, it's fine. And it does turn out that way.
And I'm totally wild, and I've made Vicky a better trader because I've called her and panicked her, and she's been like, I have a heart condition, please stop. But I mean, like, I've enjoyed trying to learn kind of the jumping on board, and I'll write something up and then all of a sudden you're like 1,000% in profit. So it's like, woo, we'll try this, we'll try that, and that's where crypto can be a little nuts. I mean, you can drop 14 grand in a second and you're like, wait a minute. I mean, we tried, BitTrue gives you a little bit, like $50 for the futures. And I tried that. I think I got squashed like a bug within a minute. So that's when I, realized, all right, look, we can make a lot more if we apply some of these technicals. And, I've learned, I like learning with volatile coins though. Most people like learning, with the easy stuff. So that's why, Christian, I obviously invited you on because I appreciate the difference. If I gave a chat on our lecture on this, it would be completely different. But, I love that you brought in, this kind of perspective of logic and reason. I love that you meditate. I think, if we can try to remove the emotion and just keep it as, sound and, practical as possible. Obviously, I don't talk about this on the channel, like my secret trading habits, mainly because Vicky is the one that always grounds me. And sometimes when I've done crazy trades, we'll scalp trade through, or we'll ride Bitcoin, or we'll, it always kind of evens out. I haven't really lost. I've made losses, but then I've also been, crazy and wild and jumped into Chims Inu or Shiba Inu, and then it's, off to the races we go again. So I don't want to tell anyone what to do. This is why I don't talk about this on the calls all the time, because, when we're educating people to come into a space, and Vicky and I have really been quite conservative in how we've approached the crypto space, because there is so much noise across the board on this, guys. And we've tried to come in from like the sound money principles and teaching, the basics of economics and, what's real money versus currency. What we do on the side is a bit different, but I love that you took the time out to give us a basic, workshop on this. For everybody at home, thank you so much for listening. If there was something that we didn't cover or we didn't move, go into thorough enough, or you have more questions on, reach out to Christian if you want to know more about learning about this stuff. The man offers a lot here, and he's got a wealth of, Christian, I love how you're like, this is what I do. This is how I do it. That's what I stay away from, and that's what I think is really important here. We define, what it is we feel comfortable in, where we learn, which techniques and trades, we identify with, all of these things. Sam, I just, I feel like you've been a student of Christian's. Apparently you are really amazing. Do you want to just say, or miss anything? Do you want to add you want to call me a crazy loon? Because I told you guys I like to ride crazy coins. I'd like to know what your experience in this, or what you've learned along the way, both in your own journey and working with Christian.
I had no intention of getting into trading until I saw Christian's messages in the channel. And I just liked how he handled some quite abusive messages from people who refuse to believe that it's possible. And I was like, okay, there's a very zen, chilled person that I feel like I instantly felt like I could trust him. So I took up the offer of the free sort of initial chat, and that was the first that I'd ever heard or understood about how trading really works. I'd always been sort of quite, I don't want to say anti-financial, but it was an area that I'd always sort of stayed away from. I'm a software developer, so the technical side of things probably comes easily for me, and so does learning new things, because that's what my job is. And what Christian was showing me, I thought, yeah, I could get to grips with that. So I've been having one-to-ones with him and doing study in my own time, and things like that I would never have a sort of, it all sounded completely foreign to me to start with. Now it's like starting to, the terms all make sense to me, and it's only been 4 weeks or whatever. The big thing that I felt from what Christian's offering is that if you just want to hold these coins for a long time, then you're basically just like a passenger to the market. And when it goes up, you're making money, and when the coin goes back down, you're losing money, and you're not in control. If you were to learn some of the basics, I think if you just learnt the trends, like you don't need to worry about all the different lines. If you just learnt the trends of, like, there's a general trend of going up, and when it's coming back down, maybe that's a chance for you to get back out into pound sterling, or maybe it's a chance to move over into a different coin that isn't entering a downward trend. Or something that's just holding a more steady line, because otherwise you're going to go up and you're going to think you're rich, and then when that coin comes down, you're going to be poor again. And the point of what Christian's trying to teach you is that there's patterns to this, and that you can anticipate some of it with a bit of effort. It's not you've got to put some time in, but if you do that, you might be able to ride the up and then either stay where you are, or even better, ride the next up on something else. But otherwise you're just sitting with it on the way back down.
That's a really fair point. And, I know a lot of people, especially with the XRP lawsuit in the last 2 years, have felt they would have made more money with Bitcoin. For example, when the lawsuit was announced, XRP went down. Some people jumped ship and rode Bitcoin up, increased their position, and then got back into XRP. In fact, my cousin did this, and she's a Midwestern school teacher, like a second grade teacher. She knows nothing. I was like, all right, do this, and because I'm just, I was a little bit wild, wild in the trade, but that was one that actually, worked for her and ended up increasing her position tenfold. It took her from $3,350 to over $10,000. Now, obviously she can't buy and sell XRP, so she's holding it. And the frustration there is that, it's not as easily to trade. I use XRP and XLM like my stable coins, albeit they're not stable and they're not officially those things. But, compared to some of the other coins in the market, FTM, or Matic, or some of these other they're all on a down right now. But when the market turns again, they'll pop. And then, obviously taking profit is a big part of it as well, so that you're never feeling overextended. Like I'll tell you, one of the biggest lessons I learned last year, remember, Vicky, I had over 1 million XDC. I watched that baby pump. I made $76,000 in one day, and I sat there and watched it. I mean, I was like, and then just as fast as it went up, it went all the way down, and XTC still has not gone up that high again, since. So that was a huge lesson I had to learn. And I really do appreciate all the voice, Christian, you're a breath of fresh air. Sam, I love your story as a software developer, taking on a new skill. I also encourage all my, part-time mommies at home, or anybody looking for extra income. This is an easy way. You don't have to do it my crazy way. I mean, I'm pretty traditional with XRP and gold and silver, but every now and then I get really bored and I want to do something, and so that's what the crypto itch has been. And thank God I've had Vicky, because she's taught me so much. And Vicky, you are incredible. You really are. You understate yourself. So someone's got to scream from the hilltops about you, because she's made so many right calls in the face of some of the big YouTuber guys, that have all the, the channel and the subscribers, And here's Vicky saying, no, I'm pretty sure we're going to back test it. I got my line. I drew my crayons. No, just kidding. But you know, like, look, there's no one way to do this. There's always a different way, to approach this subject. And for those, look, right now is not the time to be, unless you want to take a killer move like what you did with Luna there. That was awesome. Well done. But for the most part right now, we just hold and we look away. And then when the market recovers, then you can have a little bit of fun. But I mean, that was what this was about today. Hopefully it brought you guys some value. I realize we've gone over, so I think we need to wrap it up now. Any last words from you guys?
Just thanks so much for having me. I appreciate it. It's just lovely to talk to you guys, like-minded folk. You guys are really, really on the ball, really switched on about this stuff. And you clearly know a lot more than me about crypto. I know nothing about the crypto world. So yeah, thanks for having me. And if anyone wants to learn day trading, and you can day trade with small amounts, you don't need huge sums of money. If you've got 2,000 quid, 1,000 quid, you can trade margin on different platforms. So if you're interested, you want to dip your toe, want to have some one-to-one lessons like Sam, just reach out. Email address mymindfulmoney@consultant.com. Drop me an email or just message in the group or whatever. And yeah, it'd be nice to talk to you. But otherwise, thanks for having me, guys, and have a nice evening.
Thank you. Christian, do you have like a Patreon or a group, or is it just all one-to-one?
It's just all one-to-one at the moment. Yeah.
Okay. Well, thank you. This was really, hopefully it was really helpful for everybody. I learned some things. I love the perspective, like I said, and I really appreciate all of you guys being here. Thank you so much.